Hey there, 𝗕𝗏𝗏 with another installment of Capital Markets Investor Relations in 2 minutes or less. Today, we're going to start our series on building financial guidance as a public company, and we're going to talk about what financial guidance says about a company. We want to start with 3 premises, and the first is guidance drives valuation. If you manage and provide good guidance and manage expectations correctly, the stock goes up. If you perform poorly at this, the stock goes down. And this brings us to point number 2, that guidance and your performance around guidance implies 2 things. It says something about your finance culture and your finance team's competency. And then third, always be mindful of the fact that companies naturally manage finances to both the short term and long term. And always be mindful of that typically if something goes wrong, there's something internal of the company that's not working right in terms of financial guidance. So let's get into what is financial guidance. And the way I define financial guidance is it's the summary or simply the summary of your internal budgeting and internal forecasting activities. And then the second set is guidance is the translation of these activities, which make up operational finance, and it's then translated into Wall Street finance. There are 2 distinct languages here that are different, and you have to be aware and mindful of the nuances of each side of the fence. And that brings us to the third point, that there are 2 primary constituents of public company financial guidance. And those are investors, and then secondly, the board of directors. And what we're going to do over the next 10, 20, 30 videos is really walk through soup to nuts how to create and how to optimize financial guidance as a public company. Some of the things we'll talk about is here in 2025 is some real life examples. One of my favorites so far this year has been Icon PLC, and how they have done a great job of managing expectations lower without destroying their stock price. They've taken a very long-term approach, and we'll walk through how to do this in future videos. And then some other examples that we've done some videos on and others we have not done videos on are 𝗪𝗏𝘁, Delta Airlines, Evolent Health, and Astrana Health. We think each of these companies provides a scenario around financial guidance that can help instruct and inform a public company CFO and CEO on how to better optimize their guidance to get investors to do what they want them to do without breaking the rules. And then finally, let's get to key learnings. And there's 3 here. And the first is this idea that the ELC, the executives, and the company control guidance. This is the one lever that you can control internally in order to drive valuation. If you do it right, valuation improves. If you do financial expectations management wrong, the stock goes down. Second, guidance is simply the translation of your operational finance into Wall Street finance. Keep it that simple, nothing more, nothing less. And then third, when things break down in terms of financial guidance for public companies, it's typically either a culture or competency issue or both, and it can be at several different levels. And so when something goes wrong, a company needs to step back and ask themselves, do I have the right people, processes, and systems in place to manage financial expectations management accurately? With that, I hope you enjoy our series of videos on public company financial guidance, and thanks for watching.